The March 1st deadline has already passed and Wall Street is in full panic mode. Right now, traditional banks are getting hit from two different fronts of a war over the Clarity Act, but what they're not telling you is about the 20% rule, right? What they're not telling you is about the 20% ownership rule that is hidden within the language, okay? This could potentially trigger a 14 billion XRP supply shock for XRP. I'm going to show you how that works. I'm going to show you all the data, and I'm going to show you why the banks do not want the Clarity Act to go through, especially as it's written, because they are fully terrified. So if you hold XRP, make sure you don't look away because we are going to cover everything. But first, we need to go ahead and hop into the chart. Let me get my screen going and get everything set up so I am ready to go. Thank you for joining us today. Right now, Bitcoin is down to 70,700, bottoming off our support at right around the 70,000 mark. This is what we were talking about yesterday when we confirmed the breakout above our zone here of consolidation, right, that we've been talking about for the last month. Why is Bitcoin important? Everything follows Bitcoin. Bitcoin follows the rest of the market. We talk about this every single day, and I'm hitting shit already. It's going to be a fun day. I'm amped up. So Bitcoin bottoming out right at the level we predicted yesterday, right at the same time that RSI is approaching oversold. We are looking for a bounce. If it falls below, we could fall back down to 60K. Okay, but all the data is telling us we're going to get a bounce right now. So something that we are watching on. XRP currently sitting at $1.39. Will it bounce, right? $1.39.9, $1.40. Will it bounce? That is what we are watching for, the reaction. Now, I promised a bank war. Well, here you go. If you've been following the streams, then you saw this one with us live when we were watching the Senate banking GOP meeting.
As of now, there's nothing significant happening with deposit flight. I'll say that. And that stablecoins, as a general matter, anything that disincentivizes holding and using dollar stablecoins would run counter to Congress's interest. The more people who use dollar stablecoins, the lower borrowing rates are for everyone, because they're supposed to be, that's what Congress wanted, they're supposed to be dollar buying machines. So as a general matter, anything that disincentivizes people to hold stablecoins would be negative for Congress's purposes there.
Okay, thank you so much. Mr. Gould, if I could ask you.
So anything that would deter people from using stablecoins would be against Congress's view, okay? And there has been no evidence of deposit flight risk. So what are the biggest things the banks are saying are a problem? Deposit flight risk and stablecoin yield being unfair, not being regulated the same as the banks. Well, Congress disagrees with the banks. The Senate banking GOP has performed research that says deposit flight is not an issue. Interesting. What else do we have to say about it?
Well, I want to thank the president and his top AI crypto advisors, David Sachs, Patrick Witt, for engaging over in the Senate and trying to find a legislative solution for them. You know, we did that last year in the House. We got 78 Democrats to join the Republicans, and we passed the Clarity Act and the Genius Act with substantial margins, bipartisan. And in those bills, we had the two principles. One, that stablecoins would not pay a yield. Why? Because we view it as just a new payment token to be used on a blockchain. It's not meant to be a bank. It's not meant to be something that it's not. And so on a bicameral, bipartisan basis, that's been in the Genius Act. So the Genius Act does not say that you can pay a yield on a dollar-backed stablecoin, whether you're issued by a bank or issued by a non-bank. So this issue of rewards comes up. And my best advice is that that's handled in the rulemaking by the Treasury, where bank and non-bank issuers of a dollar-backed stablecoin are treated identically when it comes to sales practices, marketing strategies, in terms of does one have an advantage over the other? Because banks certainly have packaged products and provided incentives in their own business. So I think the non-bank dollar-backed stablecoin issuers and their partners and exchanges, they want to have a similar ability to package products, not unlike the banks. I think we can find a solution here.
Yeah, I mean, I understand that, and I understand that this impasse centers on whether these digital assets...
So let's think about this real quick. We'll continue, but let's think about this real quick. The banks have the ability to offer packages for people to earn money on their investments. Stablecoins want something similar. Seems like a level playing field, right? Jamie Dimon's so full of crap.
Exchanges should be allowed to offer rewards programs and pay money to those who have money on the crypto platforms. But I'm wondering if, companies like Coinbase and others are coming up with new ways to pay those rewards, like in a backdoor way. Because one of the issues that came up was the idea that these companies want to pay rewards if you're in, quote unquote, a membership program, right? I mean, I spoke with Coinbase CEO Brian Armstrong about the issue, and here's what he said recently. Watch this.
This stablecoin reward issue is very important, and I think President Trump has showed incredible leadership here, creating a strong crypto agenda. We just got the Genius Act passed.
Well, let's be honest. Of course, he's going to be very pleasant about the president because the president's backing him. We'll get into that here in a second. We have all the info.
Into law, which actually did enable stablecoin rewards to happen. The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda. They're trying to protect their own profit margins, taking money out of the pockets of hardworking average Americans and putting it into the coffers of these big banks that are hitting record profits. And so our view is that there should be a level playing field where banks and crypto companies can lean into stablecoin legislation as an opportunity. And that includes paying rewards to Americans so that they can earn more money on their money.
See, I mean, Congressman, a couple of things here. On the one hand, isn't it in Coinbase and the crypto platform's best interest to keep delaying this, delay? Because as we're delaying it, they are actually paying rewards. Isn't there a loophole in the Genius Act because of a third-party player that enables them to actually pay a reward right now? So they can delay all they want and still pay rewards, even though what you just said is supposed to be what we're talking about, whereas everybody's on the same playing field. Nobody's going to pay rewards. So there's that. And number two is this.
Interesting point. It actually behooves Coinbase to stall this because as long as it's stalled, they can still claim their rewards on stablecoins. I actually never thought about it that way until she mentioned it because so many people are talking about Coinbase being the white knight of the crypto community. I've always mentioned that it's more about their bottom line. I follow the golden rule. He who has the gold makes the rules. And people are going to do what's best for their bottom line in business. I never thought about it this way, but it's an interesting point.
Backdoor idea that, the crypto companies can say, okay, we won't pay rewards, but if you're part of a membership program, you're getting a reward. And then the third thing I want to ask you about is the fact that there's not the same playing rules. I mean, you look at any bank, you go to any bank, and we see very clearly it says FDIC insured, right? They have deposit insurance. We know a bank is FDIC insured. You don't have that with the crypto platforms, do you?
No. Well, then the dollar-backed stablecoins are simply backed by those FDIC-insured deposits or U.S. Treasuries as their backstop. And that's why I say the whole purpose of this was to create a dollar-backed payment stablecoin as a token to be used in payments on a...
Keynote, okay? No, crypto companies are not FDIC insured, but stablecoins are backed one-to-one with U.S. Treasuries.
Blockchain. It wasn't per se to create a whole new financial device beyond that, and it to be used by both fintech companies as well as banks. Here's my view, Maria. We need sales practice on a level playing field. And secondly, I think when banks tokenize deposits, some of this issue will go away.
Okay, Congressman, thank you for clearing that up. I know there's a lot of nuances here, so I'm glad that we talked.
Again, so when they tokenize deposits, he feels a lot of these issues are going to go away. Again, it's very clear. Banks are worried about their bottom lines. This whole deposit flight risk has been completely debunked, okay? Community banks have gone from over 8,000 in the year 2020 to less than 4,000 in the year 2026. It has nothing to do with stable coins. It has nothing to do with crypto. It has to do with the big banks cannibalizing themselves. It's hard to stay in business when you're not making any money. That's just how it goes. We got more info though. Let's keep going. I'll keep doing this. So let's see. We covered this one. We covered this one. And here's Caroline Pham. Let's see what she has to say about the Clarity Act and stablecoin yield.
I actually am surprised by the current impasse because I thought the draft that was released in January was so much improved from the one that was released last year. And, you know, just following on the conversation from my colleagues up here on the panel, these are pretty common sense things to want to be able to provide rewards. And I think both sides agree on that. So I actually feel that the debate right now is feels a little bit like theater. And how do we solve this? How does the movie end? The movie ends with the agencies just doing the hard work that is necessary to actually create the specific rules and requirements necessary for the use of stablecoins as payment instruments and as other types of settlement or collateral tokens. So I used to work at a big bank. I used to work at Citi for 7 years. I was regulated by the OCC for 7 years. And I think what the OCC has recently done with its stablecoin rule proposal, which there's also been a lot of froth on crypto Twitter about, is also straightforward. So what did the January draft say? The January draft basically said, yes, you can go ahead and pay rewards to users of your stablecoin, right? And what does the OCC draft say? I think pretty simply, it has a rebuttal presumption, and I like to call this like the, looks like a duck test. If it looks like a merchant rewards program, you use the example of like your United Miles card, then that's okay. If it's a look-alike deposit account, a look-alike checking account, a look-alike savings account, a look-alike money market fund, that's not okay. I like to say the rebuttable presumption is just like the looks like a duck, sounds like a duck, and walks like a duck test. So that's the pragmatic path forward. The agencies have to write rules anyway to implement this. There's a debate that's going on right now in Washington, but I'm pleased to see that the OCC, which is pro-innovation under Controller Gold, is moving right ahead forward on creating those rules that are necessary. And there's a comment period, and so let's get to work. Good policy is hard work, so let's really dig into the nitty-gritty and see how this should come out.
I love Caroline Pham. She's so she takes such a common sense approach, but we all know that the common sense approach just doesn't exist in how this goes. But yeah, if it looks like a duck, sounds like a duck, it's a freaking duck. It doesn't need to be this complicated, okay? And again, the rules are written after it's codified in the law. So they're sitting here discussing and arguing over rules that aren't even involved in the Clarity Act. Those come later from the Fed, from the CFTC, from the SEC, right? That's what all the administrational stuff as far as the CFTC, the SEC, the Fed is already being worked on, is already pro-crypto. We just can't get this Clarity Act through because the banks are scared for their life. And they're making record profits while the rest of us are suffering.
By the current
but again,
because I thought the draft,
we all knew that the people who controlled the currency were never going to let it go easy. We weren't going to get the deal or the bill that we wanted as retail crypto holders because we don't have that power. The gold, he who has the gold makes the rules. I say that all the time, and I'm going to touch on that a little bit later too. But we have more info. Let's keep it rolling. So, in regards, let me get out of here real quick. And I see you guys popping off in the chat. Keep it rolling. We will do a full live Q&A here in just a little bit. But for anyone trying to understand the 20% rule that is hidden within the Clarity Act that very few people are talking about because the holdup is over stablecoin yield and things like that. What has been one of the largest points of interest in regards to the price of XRP, one of the largest arguments is that Ripple and the Ripple heads, if you will, dump XRP on the market every month to fill their bags, right? From the escrow. That is That is one of the biggest arguments against XRP. But again, the escrow has been in place since 2017. So that's no new news for any of us as XRP holders. But when we're looking at it, that means Ripple holds more than 20% and they're not allowed to do that. So what are they going to do? And why do I think this is actually bullish for XRP and the XRPL? Well, if they have to offload some XRP, it's not hitting the open market. They're not flooding the open market with 14 billion XRP or more, or whatever number you want to throw out there. If you guys look back, the announcement that this was going to be put into the Clarity Act came in October. 2 weeks after that announcement, Evernorth popped up on the scene and is already in place. Evernorth is an XRP treasury company focused on holding XRP, growing XRP, and the adoption of XRP, as well as DeFi XRP to earn money on it. And we'll cover that here in a minute. I'm going to tie all of it together. So ultimately, I believe that this XRP will not hit the open market if they have to get rid of 14 billion of it. It's going to go to their numerous partners, their numerous NDA partners. It's never going to hit the open market. So all it's going to do is remove the narrative that Ripple is dumping XRP on the market and will reduce the supply by an additional 14 billion because it'll be locked up and used. So if no one is afraid of XRP being dumped on the market anymore and 14 billion XRP is locked up in, DeFi or whatever, or treasuries or whatever the case may be, what is that going to do for the price of XRP as value continues to move on to the ledger? I'll show you. Let's take a look. Now, what is going to cause that? Adoption and utility. Breaking: Managing Director, UK and Europe of Ripple, Cassie Craddock. Financial institutions aren't looking for standalone solutions. They want a true end-to-end infrastructure partner that they can build with. Ripple is uniquely positioned to deliver exactly that. They haven't been building a $4 billion web of infrastructure over the last 2 years to sit idle. They are the end-to-end stack. They are the one-stop shop of financial infrastructure moving forward. But they can't do it alone. Here's the second thing the banks are absolutely terrified of. At the beginning of 2026, I said this will be the year of blockchain adoption and interoperability. Interoperability is the key. In order for them to take down and actually make a real impact in the financial system over the banks, they're going to have to work together. And what have we seen in record time? Hedera and Chainlink partner. Hedera working with Chainlink to create the standard across the ecosystem. With Chainlink integrated on Hedera, developers gain secure access to real-world data, cross-chain interoperability, and on-chain reserve verification. Chainlink's data feeds CCIP and proof of reserve to help power DeFi, tokenized assets, and enterprise-grade applications on Hedera. Chainlink partnered with Hedera. Again, Hedera accepted by FedEx, moving into actual government contracts for HBAR. Again, if you're new to the channel, I hold XRP, Canton Network, HBAR, Chainlink, and Ondo, many of which are starting to partner together moving forward this year, seeing HBAR and Chainlink working together, seeing Canton Coin partnering with Zenith to launch a sidechain executive layer for Canton. Ethereum developers can now deploy unmodified Solidity applications that interact automatically with Canton's privacy-enabled institution. So now Ethereum is wired into the Canton network. Again, interoperability. DTCC. Interoperability is essential to unlocking full potential of digital asset securities. But what does it take to embed and support connectivity across TradFi and DeFi? We've collaborated with BCG, Clearstream, and Eurogroup on a new white paper that introduces practical solution neutral interoperability framework for capital markets. It explores how shared foundations, common interoperability building blocks, and real-world use cases can help reduce fragmentation across DLT networks and support secure, scalable adoption of digital asset securities. This coming a day after the announcement that they are starting to use the XRP ledger plugged in as of, well, not a day, I guess 3 days. XRP ledger being plugged into the back end of the DTCC as of March 2nd. More interoperability. Ripple now offers clients access to crypto derivatives listed on Coinbase Derivatives Exchange and cleared by Nodal Clear. So now Ripple partnering with Coinbase. Interesting. I see a web, ladies and gentlemen. I see a web of crypto blockchain taking over finance
And
right now.
lastly,
What? Now to tie it all together. What is the name of the channel? LongView Compute. A lot of people are expecting a God candle over the course of a month, a year, whatever. This channel is about the long view. I've always said it, about what's going to happen over the next 5 to 10 years in this crypto space. I've stayed true to that message the entire time. What does Evernorth have to say about what's going on?
and lastly, talking about token price. So I know that Brad mentioned on stage that in 5 years' time, he reckons that people will be in a happy place with their investment. I don't expect you to like speak to predictions and that sort of thing. But what was interesting is what you did mention on the stage about the graph that you showed from DeFi Land, showing that the DeFi landscape is actually, if you look at it, if you zoom out, we're just stagnant. So even though the market is low right now, XRP is still performing quite well in comparison to other digital assets. But if we're sitting here in a year from now, if the tech itself, or if there hasn't been a change in token price page, because of the tech, what do you think is to blame for that? Do you think it's the sort of the regulation or the bottlenecks that we may have for people using the technology?
Well, I can't predict price, and what I can say is that 1 year is not long term; that is short term. I think when you look at different cycles and innovation cycles, you got to look at these things in 10 years. 10 years is meaningful change. 10 years for new capital to form, for institutions to actually move on to blockchain. I think that's the right time horizon. And I know everybody wants 1 year, 2 years, and maybe our society needs to change a little bit and think about the bigger picture. What I will say is that the metrics feel different. The adoption metrics of tokenized value, the growth in stable coins. I mean, 3 years ago, folks were saying, is anyone using this technology? And now today you're seeing every day there seems to be a new headline of a new financial institution coming on chain.
Yeah.
And so, zooming out, wow, we are in a different place than we were 3 years ago. And so like it does feel, like the price has gone different than where the metrics are. But in general, I'm still bullish. Like I'm still bullish on this technology. I'm still bullish on the long term. But 1 year isn't long term. I think that you got to look at these things in 10 years and zoom out.
Yeah, great. Thanks so much for your time. I really appreciate it.
I have to admit, 2026, even though the price hasn't been great, has felt really great for me because I feel like everything I say comes out and gets echoed by Ripple. I was literally saying not too long ago in a stream that if you look back a year ago and look at what adoption, look at what has changed over the last year, everything that's come on chain is night and day different from where it was even a year ago. He's saying 3 years ago. I mean, that's even more of a night and day difference. But if you look at everything that's happened over the last year, to think this is not moving forward and progressing over the next 5 to 10 years is, I can't see another path. Now, what is that going to mean for price? Like he said, I don't know. I mean, we're going to see what's going to happen, but I can see it with full conviction. And again, not financial advice. I am not a financial advisor. You should always do your own research and then consult a financial advisor because investing comes with the risk of loss. We all know this by now. Okay. But I don't see a scenario where crypto doesn't go up. Now, are we going to get 1,000x or 10,000x or $10,000 XRP? Who knows? It's possible. But my plan is for 5 to 10 years. And if it happens sooner, great. I would love to be wrong. But it's like he said, our country needs to change their way of thinking. 1 year is not long term. 1 year is very short term. Okay? We're here for the long view. What's going to happen over the next 5 to 10 years, not the next 5 to 10 weeks or months. Now, one of the things I always talk about when I'm trying to position myself for investments is to follow the golden rule. He who has the gold makes the rules. Follow the money. See what the money is doing. This is why I never bet on us getting the bill we wanted when it comes to the Clarity Act. Who else follows the golden rule, ladies and gentlemen? Anyone know? Well, just about everybody. But someone said it very loud today. And so it begins. Donald Trump, the golden rule of negotiating and success. He who has the gold makes the freaking rules. That's your president. Sound familiar? Something I've been echoing forever, right? That's how we position ourselves here. We follow the money. We follow the charts. We follow what's really happening. And we base it on history. Again, if we look at every major technological advancement over our lifetime, again, something I've said before, it all follows the same path every time. And in order for there to be a shakeup and innovation, there is always crisis. Always. What are we doing right now? We're in the middle of an Iran war, and I'm sitting here talking about crypto. Why? That's important. And we'll touch on the war. I appreciate everyone being here. I'm almost to the chat. Keep the chat rolling. I'm amped up today because I feel like everything I've been saying is being echoed from everywhere right now, and it feels good to get that validation. Not gonna lie. It doesn't change my viewpoint whether I get the validation or not, but it feels good. China sets economic growth target below 5%. For the first time in decades. The goal announced at the gathering of Communist Party leaders was the lowest since 1991 and can offer clues about China's policy-making plans. I'm not going to read the whole thing. It's boring. The target's 4.5%. Most people, it seems like, think that's bogus, that the real target's closer to 3% based on their, other sections of their country. You can go through and read the whole thing if you want. It's on the New York Times. But basically, it's impossible to keep that amount of consistent growth over time. The bigger you get, the harder it is to grow. We all know this. So January, that growth last year was exactly 5%, which not everyone accepts the official numbers for face value, though. Some experts say that the actual growth may be half of what the official statistics indicate. And you accompany that in with the pressure they're feeling on their energy crisis right now. And it's not the main focus of this video, but we can talk about it as well, or I can save it for a different video as far as China cutting off exportation of diesel and gas, right? Okay. So what happens when there's a oil crisis, right? What happens when there's an oil crisis? People start conserving their own oil. Less exports go out. So it compounds the effect. I was looking at buying longs on oil last night and I just missed my entry. And I stopped myself from chasing the damn thing, and I wish I wouldn't have because it shot up like I expected it to, but I missed my entry and I didn't want to chase the trade. I made the smart move and ended up costing myself a lot of money this morning. I probably would have made about $2,000 on that trade overnight, but it is what it is. And again, not financial advice. It's just what I do in my own free time. However, last piece of information, I'm going to hop into the chat and then we'll do a recap for anyone who came in late. I'll rapid fire the recap. Zenith launches as the EVM layer for Canton Network. I do love my Canton. We touched on this briefly. Merging Ethereum's developer ecosystem into Wall Street's blockchain. Remember, Ethereum is Wall Street's baby. right? So this is basically calling Canton Network Wall Street's baby. Should I buy Ethereum, ladies and gentlemen, to go with my Canton Network? I don't know. It's something I am paying attention to as JP Morgan, DTCC, and NASDAQ accelerate tokenization on the Canton Network. Again, JP Morgan, one of the biggest investors in Ethereum. Okay, starting to see a connection here. As JP Morgan, DTCC, and NASDAQ accelerate tokenization on Canton Network, the blockchain that's processing more than 9 trillion in monthly volume, Zenith is opening the network to hundreds of thousands of Ethereum developers for the first time. Holinsky said Zenith today emerged from stealth as the Ethereum execution environment natively integrated with the Canton Network, enabling developers to deploy unmodified Solidity applications that interact atomically with Canton's institutional blockchain infrastructure. I won't read the whole thing. This is major, okay? Ethereum bridging to Canton Network is absolutely major, guys, okay? Now, for everyone who came in late, because the stream is really ramping up. Remember, engage in the chat. I do a live Q&A after I get through all of the information. But I want to do a brief recap for anyone who came in late because we need to focus on what is important today. Now, I played all of these videos. I don't want to play them for everyone who's already been here, okay? I'll try to cap the key, most important pieces of information, okay? So Trump takes aim at the banks over the crypto bill talks. I will play this one. It's only 5 minutes long, but this is probably the most important thing as far as Trump taking the side of crypto.
Well, I want to thank the president and his top AI crypto advisors, David Sachs, Patrick Witt, for engaging over in the Senate and trying to find a legislative solution for them. You know, we did that last year in the House. We got 78 Democrats to join the Republicans, and we passed the Clarity Act and the Genius Act with substantial margins, bipartisan. And in those bills, we had the two principles. One, that stablecoins would not pay a yield. Why? Because we view it as just a new payment token to be used on a blockchain. It's not meant to be a bank. It's not meant to be something that it's not. And so on a bipartisan basis, that's been in the Genius Act. So the Genius Act does not say that you can pay a yield on a dollar-backed stablecoin, whether you're issued by a bank or issued by a non-bank. So this issue of rewards comes up. And my best advice is that that's handled in the rulemaking by the Treasury, where bank and non-bank issuers of a dollar-backed stablecoin are treated identically when it comes to sales practices, marketing strategies, in terms of does one have an advantage over the other? Because banks certainly have packaged products and provided incentives in their own business. So I think the non-bank dollar-backed stablecoin.
Don't you think it's funny that JP Morgan comes out and says we want a level playing field, but they're telling crypto companies, no, you can't package these things. You can't package these things, but we're still going to do this over here, and we have been doing this, but we want a level playing field, right? It's all bogus. It's all BS.
Issuers and their partners and exchanges, they want to have a similar ability to package products, not unlike the banks. I think we can find a solution here.
Yeah, I mean, I understand that, and I understand that this impasse centers on whether these digital asset exchanges should be allowed to offer rewards programs and pay money to those who have money on the crypto platforms. But I'm wondering if, you know, companies like Coinbase and others are coming up with new ways to pay those rewards, like in a backdoor way. Because one of the issues that came up was the idea that these companies want to pay rewards if you're in, quote unquote, a membership program, right? I mean, I spoke with Coinbase CEO Brian Armstrong about the issue, and here's what he said recently. Watch this.
This is a key point that most people don't think about. She makes a fantastic point. Pay attention to this because this is important.
This stablecoin reward issue is very important, and I think President Trump has showed incredible leadership here, creating a strong crypto agenda. We just got the Genius Act passed into law, which actually did enable stablecoin rewards to happen. The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda. They're trying to protect their own profit margins, taking money out of the pockets of hardworking average Americans and putting it into the coffers of these big banks that are hitting record profits. And so our view is that there should be a level playing field where banks and crypto companies can lean into stablecoin legislation as an opportunity. And that includes paying rewards to Americans so that they can earn more money on their money.
See, I mean, Congressman, a couple of things here. On the one hand, isn't it in Coinbase and the crypto platforms' best interest to keep delaying this, delay? Because as we're delaying it, they are actually paying rewards. Isn't there a loophole in the Genius Act because of a third-party player that enables them to actually pay a reward right now? So they can delay all they want and still pay rewards, even though what you just said is supposed to be what we're talking about, whereas everybody's on the same playing field. Nobody's going to pay rewards. So there's that. And number two is...
Think about that. I always say on this channel that when it comes to money, people are going to act in their own best interest, and then seeing that and aligning with their interest is how you make money. Looking at Brian Armstrong, it is in his best interest to delay the Clarity Act because it allows his company to continue earning money like they have been. And that is not something that people are talking about. Now, I am of the vein that the banks want a monopoly and the banks are, greedy, and I get that. But I don't trust Brian Armstrong at all either. I don't think there's any real good people when it comes to this, okay? Now, what is going to be best for us isn't probably going to happen. I'm always saying follow the money, the golden rule. He who has the gold makes the rules. The banks are not going to give up control of currency. It's just never going to happen. In a good negotiation, neither party walks away happy. And right now, both parties are playing each other. We got to cut through the noise.
This backdoor idea that, the crypto companies can say, okay, we won't pay rewards, but if you're part of a membership program, you're getting a reward. And then the third thing I want to ask you about is the fact that there's not the same playing rules. I mean, you look at any bank, you go to any bank, and we see very clearly it says FDIC insured, right? They have deposit insurance. We know a bank is FDIC insured. You don't have that with the crypto platforms, do you?
No. Well, then the dollar-backed stablecoins are simply backed by those FDIC-insured deposits or U.S. Treasuries as their backstop. And that's why I say the whole purpose of this was to create a dollar-backed payment stablecoin as a token to be used in payments on a blockchain. It wasn't per se to create a whole new financial device beyond that, and it to be used by both fintech companies as well as banks. Here's my view, Maria. We need sales practice on a level playing field. And secondly, I think when banks tokenize deposits, some of this issue will go away.
Okay, Congressman, thank you.
Some of this issue will go away when banks tokenize deposits, okay? Now, granted, what is, aside from stable coin yield, right? What is the next thing that banks say they fear when it comes to the Clarity Act and when it comes to crypto and when it comes to stable coins? The deposit flight risk. Any of you have heard this term? Well, we actually watched the live Senate GOP meeting when they discussed this, but here's a clip.
As of now, there's nothing significant happening with deposit flight. I'll say that, and that stablecoins, as a general matter, anything that disincentivizes holding and using dollar stablecoins would run counter to Congress's interest. The more people who use dollar stablecoins, the lower borrowing rates are for everyone, because they're supposed to be. That's what Congress wanted. They're supposed to be dollar buying machines. So, as a general matter, anything that disincentivizes people to hold stablecoins would be negative for Congress's purposes there.
Okay, thank you so much. Mr. Gould, if I could ask you,
anything that disincentivizes people to use stable coins is going against Congress's point, essentially. There is no evidence to this point of deposit flight risk. As a matter of fact, I actually went and did some research. I don't have it in front of me. I wish I did. But I went and did some research. As of 2020, there were over 8,000 community banks. As of 2026, there are 4,000. Deposit flight risk has not a damn thing to do about community banks being in trouble. Again, it's a charade. My opinion, not financial advice. What does Caroline Pham have to say about it? Right? We all love Caroline Pham.
I'm surprised by the current impasse because I thought the draft that was released in January was so much improved from the one that was released last year. And, you know, just following on the conversation from my colleagues up here on the panel, these are pretty common sense things to want to be able to provide rewards. And I think both sides agree on that. So I actually feel that the debate right now is feels a little bit like theater. And how do we solve this? How does the movie end? The movie ends with the agencies just doing the hard work that is necessary to actually create the specific rules and requirements necessary for the use of stablecoins as payment instruments and as other types of settlement or collateral tokens. So I used to work at a big bank.
And she goes on to tell her story about the big bank, but she believes that this is all theater. And I tend to agree with her because they want to hold their money. So who's really holding up the Clarity Act? Is it Coinbase or is it the banks? Either way, I'm not a fan of either of them. And again, we moved on to the DTCC and interoperability. Interoperability being the key feature of 2026, the web of interoperability that will eventually overtake the financial system. So let's hop into the chat and talk to everyone. I appreciate everyone taking their time to be here today. We will leave XRP up in the background while I speak with the chat. Let's see who made it in today. Oh, you guys were great on the chat today. Fantastic. Charles said he bought in 2017, 2018. I picked up my first XRP in 2019, actually, was when I first started buying my XRP. Good afternoon to Raul. Good day, Earth Angel. That's a new name. Where are you from? And again, to all my new people, thank you for joining. One of the things I always say is your time is your most valuable asset. So the fact that you guys take your time to be here is truly the most important thing to me. And for some reason, my chat bar isn't coming up. Let me fix that real quickly. I apologize. Let me fix it. Hopefully it works. I thought I fixed it already. Control V. Oh, I don't want to do that. All right, hang on. Let me fix this. Bear with me. Give me 30 seconds. Yeah, that's the right one. Yeah. Okay, let's see if it works now. Is it working? Yeah, okay, it's working. Good. All right. Good day, Earth Angel. Charles in the house. AC in the house. Kelly in the house. Everyone's here today. Rangel R. Angel Stone. I don't recognize that one from Bulgaria. First by February 2025. Okay. I mean, some people are negative. I mean, that's a lot of people are negative. I'm negative right now. Barely, but I'm negative right now. My average buy, I think, is $1.44 for XRP. Kelly first started buying XRP September 2025. Not the best time to start. Well, if you've been buying the dip, though, right? If you've been buying on the way down, you've been trying to even out that dollar cost average. Again, we believe in dollar cost averaging for the long view here. This is not a pump and dump channel, not a hype or hopium channel. Sir Charles, not your first time. A lot of people do like to hide around in the background, but when I notice the names, I like to point it out. So thanks for commenting. Thanks for chatting. Kelly says, I don't think Coinbase wants to stall because once they are allowed to do it for all, they'll probably triple their customer base. Maybe it depends on how the laws are written, how the rules are written. Right now, that's the thing. Right now, they know how the rules are written and they know what they're making. I think that's what comes up with it. Judah says, what's up? Sir Charles agrees with the theater of Caroline Pham. Kelly, I see the banks having two easy ways to solve this. One, offer stablecoins. One, offer stablecoins plus rewards to their clients. Two, keep your current model, but invest the bank's dollars into stablecoins, make a bunch of money on the back end pocket. Yeah, I mean, they're going to make their money. The fact that they're acting like they're going to go broke is ridiculous. Yeah, before she left, she gave them a very, very clear set of rules at the CFTC. Absolutely. Kelly's, that's an interesting point. Perhaps Coinable benefits the most from having more customers. Yeah. Coinbase will benefit the most from more customers. Yeah. If the Dems were in charge of beaches, we'd have a shortage of sand. Yeah, you're not wrong about that. They always seem to drag their feet on everything. Would like to see a 70 to 200% gains over the next year. Trump watches LongView compute. As far as the golden rule, well, you know, I mean, the golden rule is an old term, right? So it's negotiations in business, but he who has the money is the one who makes the rules in negotiation. It's just how it goes. Our Angel, in my opinion, hope they pray for OFC to have the price guys soon. Crude oil, $80 per barrel. Looks like Japan carry trade unwind will happen very soon. Again, if the reverse carry trade does happen, that's one of those things, and say the number were to appreciate to some astronomical price over the next 2 months. Great, I'm positioned for that. But say the price doesn't go anywhere for 5 years. Great, I'm positioned for that. That's called delayed gratification. Whenever the price may appreciate, I'm okay, because my plan was for 10 years. Anything that happens sooner than that is just gravy for me. Three Brothers said, press the like button. Again, if you guys are here and you're getting some value from the stream, please press the like button. We stream every single day, Monday through Saturday at noon, to discuss exactly what's happening in the market, to cut through the hype and hopium narratives and try to get the real data of what's happening in this crypto market so we can position ourselves in the best place going forward for the long view. Because in order to know where things are going, you have to know where you are. History repeats itself, and history will tell you the story. It helps to cut through the narrative, and that's what we are here for. And if you want to help support that, and you want to be a part of the LongView crew, I suggest becoming a member. It's only $7.99. We do a weekly live stream with a full Q&A that is basically just one-on-one directly for me and my members. And I have a weekly newsletter coming out, not this Sunday, but next Sunday, to let you guys know everything that's going to be coming out the week beforehand, to kind of prep you guys for the week beforehand and what I am seeing moving forward. Again, none of it's financial advice, but it is specifically for you and the members. So if you want to be a founding member, go ahead and hit that right now. AC, thank you for you're always welcome to be here, AC. Thank you for changing your picture so I don't get flipped off every time I pull up your chat. The banks want a monopoly, says Clint Gold. Of course they do. Of course they do. Why do you think the monopoly guy looks like an old banker? Coinbase stalling the Clarity Act and hoarding the treasury yield only works till a big bank launches a yield-bearing stablecoin. Exactly. Well, we'll see if they take advantage of the rules or not moving forward. If that guy had a red tie, he'd look like oh, you're talking about Brian Armstrong? Yeah. We just need to put a barcode tattoo on the back of his head. He might have one. Ripple is building the exact thing that makes Coinbase's current model obsolete. Yeah, pretty much. It is direct competition to Coinbase, but Ripple is partnering with Coinbase for derivatives. What if Ripple bought Coinbase? Just throwing that out there. What if Ripple bought Coinbase, or there was a merger between Ripple and Coinbase? That would take over everything. RLUSD had a yield-bearing stablecoin. Oh, on the RLUSD. Well, it's not. RLUSD isn't necessarily a yield-bearing stablecoin, but RLUSD can be put into DeFi for like an 8-9% yield through a third party, right? Most of the stablecoin yields are offered by a third party, not directly by the issuer. And that is the loophole of the Genius Act. They will pass the skinny version of the Clarity Act, and we'll do a study on stablecoins and bank deposits, come back in 2 years and try to make amendments. Well, they have to, just because the Clarity Act goes through, the agencies, right? The CFTC, the SEC, and the Fed will still have to write the rules, right? They'll still have to write all those rules. I don't think they will pass it, in my opinion, but this will make the exchanges get their license ASAP. Well, if they don't pass it, that's just bad for crypto in general. We don't want the crypto industry to move overseas. We don't. Because we need all of the infrastructure and all of the all of the economic power, especially right now in the world. That's why Trump's so hardcore on this, right? We need every economic advantage as a country we can have in the world right now. China is coming for us, man. They are the #2 economy and they are building. Just like Trump announced that he's buying a shit ton of gold. What do you think China's doing? Okay. Let's make no bones about where I stand on this, okay? This is a battle, this whole Iran thing, this whole crypto thing, the whole AI thing, all of it is a power struggle between the United States and China, period. That's what it all comes down to. So when we are looking at these things as a whole, we need to see what those two players are going to do, because those are the two major players in all of it. Good morning, LongView crew. With all the dominoes falling in XRP's momentum, should the XRP rich list be something we should be shooting for? Again, to me, I always say this. It's not a number. It's a system. It's never a number. It's a system. It's about dollar cost averaging in over time. Not about trying to time tops and bottoms, about doing your research and having conviction in your projects. Anyone who's dollar cost average into XRP since 2017, 2018, 2019 are doing very, very well for themselves right now, even as people talk about how bad crypto is, okay? This is a long-term thing. Most of you are older. Most of my viewers are 35 to 55 years old. Turn your brains on, relax, okay? We've seen this. Dollar cost average in. Take emotion out of it. I'm positioned too, even if my portfolio is 55% down. You know, I could, if you've seen previous streams, you've seen me talk about the state of our economy, the debt ratio, housing. I talk about everything here. Most of you are catching it for XRP, but I cover the overall economy. I heavily invest in crypto, love crypto, share crypto news, but price is reflectant upon the overall economy. So we need to have a good idea of what's going on in the overall economy so we can interpret what's going to happen with price, right? For the long view, not necessarily for what's going to happen today, tomorrow, or next week. October 25th. Oh, that's when you buy. Okay. Deuce's Life, you always have positive energy. Thank you. Love the great shorts you do. I've kind of backed up on the shorts a little bit because, and honestly, I try to keep the shorts up there. I've kind of backed up on them a little bit. Most of you have noticed. I've been trying to keep them as part of the streams because I feel like most of the time the shorts have to be, they use psychological triggers to get people to watch them and stay on them, man. In order for a short to get actual traction, it's a freaking psyop job. It really is. And I hate making them. I'm good at making them, but I hate making them. And because of that, my channel has actually slowed down in growth. My channel was growing from the shorts, but I absolutely hate making them because I feel like I'm psyoping people to watch them. Truthfully. So if you guys want to help the channel grow, please like the stream, subscribe. That's the best way to get the real information out there so I don't have to psyop people with shorts that are designed specifically to make people watch. That's how YouTube works. It's all a psyop, man. The hooks, the rehooks, all that stuff. It's all human psychology. Ripple buys Coinbase would be epic, is epic. If Ripple and Coinbase were to work together on that kind of scale, they would dominate finance. That would scare the living crap out of the banks. If the Japan carry trade happens and XRP was a chosen one, what is the price of XRP? Whatever it needs to move liquidity on a global scale. I mean, how much needs to be transferred daily on a global scale? Quadrillions. So it would have to be 3 digits minimum if the carry trade happens and it actually the chosen one and they actually move everything on XRP and they're trying to do it that way, then yeah, it would have to be 3 digits. I mean, I will agree with Jake on that. If this were to happen, Because that's what you're talking about, right? Jake's thesis. So if it were to play out, then yeah, in order to transfer that level of value, it would need to be a much higher price. But I don't think that's happening like that. That's just my opinion. I never thought that. It will take Trump to do an executive order from Trump or him sitting in a room and locking it, making them sign a deal. I mean, they want to get it done. I mean, Trump wants to get it done. The crypto companies want to get it done. It looks like Coinbase is on board now working with Trump. So can we strong arm the banks in doing it? Probably not. I mean, if you look back in history, I'm going to show you, okay, tinfoil hat time, ladies and gentlemen, tinfoil hat, okay? If you look back in history, do your own research, but if you look back in history and look at every assassination of a president, what did they attack? Think about it. Currency, banking system. They went after the banking system. They went after the banks. Every single president that was assassinated was fighting with the banks about currency and currency control. Just saying, do your own research. LongView Compute, yeah, I know. I'm following and chat with you guys already 2 months. Well, I appreciate you finally hopping in and engaging in the chat. If you guys haven't noticed, most of my subscribers probably have. I feed off of the chat. The more energy the chat has, the more energy I have, the more things I can talk about. Whenever I see little things pop up on here, then it gets my brain going and fires off even more. So I really feed off the chat. So thanks for keeping it going today. Vince Brown, it would be Kraken or Uphold, I think, not Coinbase. I think you're right with that, honestly. I think Kraken would be it, especially since Kraken just got their skinny fed master account as well. But I think whatchamacallit? Oh, what's his name? Shoot, my stroke brain. I think Ripple is going to get their own skinny fed master account anyway. But if they were to partner with an exchange, I do think you're right, it'd be Kraken. Show the short video here. Which one? Which short? Be right back. You guys have kept me going for a long time. I have to piss. I'm about to piss my pants. Give me a minute. Woo-wee. Oh my goodness. All right, sorry, just in from work. Did Ripple dump 14 billion XRP? No, they did not dump 14 billion XRP. For those of you who may have came in late, I'll touch on that real quick, okay? The 14 billion XRP dump. So hidden, most of you probably know it's there because most of you probably search XRP like crazy. But hidden within the Clarity Act is a rule that any company cannot hold 20% of a crypto token, okay? So in order for Ripple to fall under that, they would have to offload 14 billion XRP. Most people think this is going to flood the market. Most people think this is going to be bad for XRP. It's going to crash the price, okay? I don't believe that. Here's why. Because in October, when this was announced that this was in the Clarity Act, within 2 weeks, I shit you not, within 2 weeks, Evernorth popped up and was live. Okay? Evernorth is specifically an XRP treasury company designed to make money off of XRP and grow the use case of XRP. It's an excellent parking spot for XRP if they have to offload some, as well as their 1,700 NDAs and partnerships. So if or when Ripple it has to get rid of their XRP to keep them under that 20% threshold, it is not flooding onto the markets. It is going to be removed from the market. right? No, they can't just transfer it to their treasury company, but they could sell it to them, right? My point is, it's not going to be on the open market. They can actually make deals to sell their escrow right now, and then when it's unlocked, it just goes to them. Or they can make deals to sell their escrow accounts now to be unlocked at a future time. That's allowed to be done. David Schwartz came out and clarified that on X. So they can definitely move it around. They have to sell it. They can't just gift it, but they can move it around to their partners. My point is, the biggest narrative about XRP, one of the biggest negative narratives about XRP is that they dump a billion XRP onto the market every month and it keeps the price down. Escrow. We know this. Escrow has been in effect since 2017, but that is the thing. So we have this constant supply increase, even though there's only 100 billion. But we have a constant supply increase into circulating supply. So when Clarity Act goes through, they move their 14 billion XRP to their partners. Now there is no longer XRP coming into the market every single month. It will effectively reduce the circulating supply. My opinion. I never thought that XRP was going to be dumped onto the market. Never did. Lincoln cut the banks out with the greenback in the 1860s. Stablecoin wars are the same fight, just digital. Absolutely. The Newsmax Carl video talking about XRP and the national debt. Carl Higbee was a Navy SEAL. Carl Higbee video talking about XRP and national debt. Let me see if I can find it real quick. I don't want to get out of that. Let's see. Carl Higbee. I'm sure it's on YouTube. Let me just go to YouTube. Carl Higbee. Chang warns China submarines are moving closer to U.S. shores, according to Fox Business. Just saw that while I was looking for this. China's getting involved, people. I was worried about this. Let's see. I don't see anything about Carl Higbee and XRP. Let's see. Was it a short? Oh, here's a minute 17. Cryptocurrency can lead the country to economic prosperity. I guess I'm not seeing what you're saying here. But I'm right under it, apparently. I'm right there with it. Is this the one you're talking about? Let's see.
Managing your supply chain shouldn't feel like a balancing act. Fulfilling retail, wholesale, and e-commerce orders on time from multiple DCs.
You see, the government can't control crypto like it controls banks and the bogus Federal Reserve, printing money out of thin air. Ronald Reagan famously said, that the government operates very simply. If it moves, regulate it. If it stops moving, subsidize it. If you can't do either, ban it. He didn't know about blockchain. Reagan didn't know about the fourth option. Become what you seek to control. The government's only option to actually have any seat at the table in any type of control over crypto is to participate in it. If you own it, that's great for you. It's going to be worth a ton. After all, we can just print money, buy crypto with it. That's why crypto's here to stay. It's the answer to make sure that even if we do lose a tooth on the zipper again, it doesn't matter. But more importantly, the value of that seamless zipper could be the trick to wipe out the country's national debt. Print money, devalue the dollar, explode crypto investments, sell it, wipe out the national debt, replenish the national gold reserves, fund Social Security, rapid deflation, and reset the system to before the Federal Reserve ever left the gold standard.
You know, folks, I thank God for my wonderful wife, my kids.
Well, you know, that is quite interesting. And you take that into effect with, let me pull it up here. Again, the golden rule. He is the gold makes the rules. Right after Trump had brokered a multi-million-dollar deal between the U.S. and Venezuela to buy gold. So that certainly lines up with that theory. It's interesting. There's so many theories out there, but the thing is, the most important thing is that this is such an exciting time to be in crypto, right? For us to be a part of this transition, to be sitting in this position, for a part of this transition. I remember being a kid when the internet was coming on board and not fully understanding what was sitting in front of us. I'm not missing this one. I am not missing this one. I am here. I am positioned for the long view, and I am not going anywhere whatsoever. Let me get caught back up in the chat here if it'll refresh for me. Here it goes. Noticing XRP number 3 spot on Fox Business a lot more frequently. It's coming. Welcome back from London. It's coming. Keep missing your streams. It's been a while, but happy to see your channel is growing. Keep up the good work and the viewers. Hit that like button. I appreciate you all being here. I appreciate you all supporting the channel. I appreciate you all helping grow the channel. Because remember, this channel is for the community. This channel is about creating a community of people seeking truth in crypto and seeking a way to build for the long view and to cut through the hopium, right? With all the AI and the deep fakes and different narratives. We're here to break through that. The government should print money, buy a ton of XRP and Bitcoin, pay all the national debt. Well, they should buy a ton of XRP and Bitcoin, then print the money, right? We don't want to print the money first. We need to buy it before we print. Yes, but he names XRP in the video I watched. Oh, I got you. But he had XRP written on there. But he's probably just trying to appeal to a broader crypto audience. Makes the most kind of sense. So again, that's everything I got for you guys. I did a full recap. We went through the whole chat. Please, on your way out, hit the like button. If you're not subscribed, make sure you're subscribed. We stream every single day, Monday through Saturday, at noon to cover the real news, the non-hype, non-hopium, to see what exactly we're dealing with. And again, if you want to help support the channel and help with creating, or help support the channel and help grow the tools we can to seek out this information, please consider becoming a part of the LongView crew and become a member, okay? We do a members only live stream every single Wednesday just for you guys, just you and me. All right, I'll see you guys tomorrow.